from Capital joining in on the show right now to analyze exactly that. Hiren, hi, good to have you on ET Now. Looking dapper for a Saturday, I must say. Was it worth it?
Yeah, absolutely. Every penny of it, I would say.
Yeah, I can see trend, consumption, Phoenix Mills, all of it was climbing up. But tell me, for a market perspective, Hiren, other than, of course, more money in the hands of consumers, what's really been the big takeaway?
I think, Ayesha, if you really look at it, uh, the perception was that consumption was slowing down in India. Uh, uh, you know, uh, Credit growth was struggling. And that part of the economy really needed some upliftment. And I think that you needed to get the mood of the consumer up. And I think by giving this tax break, I believe that the government has achieved that. And mind you, they've achieved that fine balance along with preserving the fiscal deficit glide path and also giving equal importance to areas of the economy which need competitiveness, which is manufacturing, especially labor intensive. For the first time, they've talked about doing things for gig workers. There are some new thrust areas like nuclear energy. So I think all around, uh, to me, it's a fairly good and a balanced budget.
Sure. But, Hiren, for a market which is so brittle and fragile, such as ours right now, the fact that we've knocked off 10.5 to 11 odd percent from the 52-week peak on the Nifty alone, and even more so when it comes to the small cap index with a 14% knockoff. And, especially the narrative around now Trump 2.0, Monday morning, I don't think it'll be the budget, but the tariff talk, which is going to perhaps, dominate all of our screens and morning table conversations. How much can the budget really try and bring about buoyancy in the equity markets? Or do you think there's a clear disconnect? We are dictated by the global mood right now.
So I think no, I think even the budget is significant. I think there was also, Ayesha, we forget that until yesterday there was still a little bit of resident fear within investors that will they again tinker with the capital gains tax or the STT, right? None of that has come through, which is good news. And yes, I think finally in the next 2-3 days, people will forget the budget and then we will be back to basics as is always the case. But I think I wouldn't say that this budget is not significant. I think it has given a signal that it does care for the middle class, it does care for consumption. And for too long, there was a clamor to get something done there. And I think while there is a wide perception that capex allocation has moderated, frankly, if you look at the numbers, it's not really the case, right? While the government budgeted for 11,000 crores, but they said they will end up spending about 10,20,000 crores. And then for next year, they've budgeted again 11.2 lakh crores. But if you actually look at what the stock markets or earnings or order books will be important, is that we have the data for the first 9 months of this fiscal year. And the government has so far spent about 6.8 lakh crores, which means that the next 3 months, you still have 3.4. And then on top of that, you have 11.2 for next year. So if you take the 15-month period, the government actually will be spending almost 14.6 trillion rupees on capex, which is a run rate of almost 97,000 crores a month versus an average spending of 75,000 crores that they've done in the first 9 months of this year, which means it's not a 10% hike. It's actually, in real terms, it will be a 29% increase, obviously provided they spend that money in the first 3 months and they spend the 11.2 for the next year, right? So I don't think it's that much of a bad news. I think it's just about the fact that, people had given up on consumption. And I think this was expected and finally they delivered. And that's why you're seeing what you're seeing in the markets, where all consumer stocks have been bid up.